Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike York. Today is Thursday, June 4th. Hope you guys are having a great day so far. This one's coming out a little later than I normally do, which I apologize, but still morning here on the West Coast. Let's jump ahead. We do got a few items here in economic data. We got one of the three of the jobs numbers we'll see this week. Yesterday, if you saw the video, saw the ADP report, and tomorrow will be the big one from the Bureau of Labor Statistics, which will get the jobs data on that as well as the unemployment rate. So on this one, the previous week, initial jobs are for last week's. So the previous week came out at 2.13 million job losses, people applying for unemployment. Forecast was accounted for 1.81, and it came a little bit higher at 1.88 than expectations, even though it is lower than the previous weeks. So good news and bad news that we're still got a lot of people applying for unemployment for the first time. However, that trend seems to be declining each week as we see this. So that's the good news. Now, productivity, we had for Q1, we had a previous report at 0.25 or a drop of 2.5%. Forecast is calling for a drop of 2.7%. However, the final revision comes in at 0.9%. So that's much better than, of course, a drop of 2.5%. Unit labor costs, however, we see a 4.8% previous report that came out. Excuse me about that. 4.8, and forecast con for 5.1% increase, and it came right at forecast at 5.1. So unit labor costs did increase a little bit during that period, and these will be the final revisions for Q1. Let's go ahead and take a look here at the headline news. Stocks are actually down a bit today. They're taking a little bit of a breather. For the most part, they've been going up and up and up, and they keep resisting all the other stuff that's been going on, from the protests going around to to the tensions with China and stuff like that. So we've had a lot of things going on, and they seem to be kind of shrugging those off because of the optimism that the economy is getting back to work. But again, we don't know how soon we're going to be able to get that economy back to full swing, because there's just so much going on right now, and they've been kind of shutting those out. But today it's taking a little bit of a breather. ECB, which is a European Central Bank, decided they're going to go ahead and increase their allotment of like their buyback program, kind of like our version of the QE quantitative easing, where we buy back mortgage-backed securities, treasury, stuff like that. They're doing their version over there, and they increase that to try to help stabilize their economy over there. Let's see how this is playing out in the bond market. It's not playing out too well. We did rebound a little bit yesterday. We were down much further and pulled back and kind of landed right around the 50-day moving average. Today we are going down further. We did open below them and are down a little bit further. We're currently down about 17 basis points, and this is going to lead to another price for the worst. So we're going to see pricing worsen a little bit. Now that we're underneath these, we do have a lot of room to the downside. So if you're in any transaction right now, you may want to look towards locking. So just be on the safe side, because we've got a lot of room down to the downside. And this could be here basically a ceiling of resistance. So this could prevent us from breaking upwards if we can't do anything now. So if we continue this trend, this is going to keep a trend here where we're going to be stuck below that, and we got nothing to the downside to move. All right. So, and then we got the yields on the other hand. They rose, and they're up about 0.81 right now. So yields broke above theirs and adding more, and they got a lot of room here to keep adding more pressure on mortgage-backed securities. So again, I think the market's a little too optimistic right now, but again, this is how the market is. And sometimes we run into these situations where the stock market gets in these euphoric measures. They get a little optimistic, sometimes hedge on the clouds and not real realistic. But again, we endure those and kind of move on. And again, as a result, mortgage rate money is going from mortgage-backed securities, which is why you see mortgage-backed securities coming down and rates rising a little bit and going into the stock market. So we're kind of one or the other. All right, so that's pretty much the wrap for the day. If you guys are looking to buy or refinance and located in California, I'd love to hear from you guys. If you guys are, if you can either direct message me or email me are the two best ways to reach me, and we could discuss what we can do here. We got a lot of different loan programs, great pricing and everything, and we can certainly see how we can help you guys out. All right, you guys have a great rest of your day. Thanks so much for watching, and we'll see you in tomorrow's video. Bye bye.